Hi everyone. Today is the 26th of September. It's also Big Fed auditioning day, so many of the speakers chit-chatting about X, Y, or Z, auditioning for their next positions, as it were. All right, so what gives? Let's start with a daily review of what's going on overall. I am going to delete this for now. It is less is more. We're going to stick to our stochastic momentum index, which clearly tells us that we are very extended. But here's what we've got going on. A very big picture still says buy the dip. So listen, until it tells us not to buy the dip, we're going to buy the dip. What do we want to look at? We want to look at pullbacks that make good buy zones. Hello? Okay, great. And so I have this at the 1.5. I don't really need to. I think value area high is probably the deepest support we're going to see for this day. My Metastock program called Target Rich Trades that I built with Metastock gave us another take profit day. And we've got a ton of negative delta that keeps building in the market. And that means that if these guys are building negative positions, at some point they're going to have to puke, and that will give us a blow off top. So until we definitively land underneath these areas, we're going to buy every dip. And when I say definitively land, I want to see a weekly close underneath this zone here at 568. All right. Let's quickly look at cues. We're going to look at the daily formations first, and then we'll jump into the 1 hour. I just want everybody to be sure of what they're seeing, right? Let's draw this Fibonacci here, right? I want to make sure that these are only visible on, no, original time frame only. All right. That way it won't get messy. Okay, so what are we looking at? Huge. Micron did absolutely fantastic. Listen, that call and put butterfly spread that we had is going to be golden because we are moving on the right side of that formation. But we are coming into resistance. And so my thought is, I've got all kinds of meetings today. If you're watching this and you took that trade, not a bad idea to manage some of it today. Take half of it off, whatever it is, just to clean up a little. There is upside pressure moving 496. Potentially we get back to 500, but who's to say? We are gapping up, and so people are chasing price either to leave their positions or because they want to participate in the upside motion. Yes, I know I haven't done gold and oil in a while. It's just not a lot of time, and I don't want to make these videos long. They're just, nobody wants to watch them. So what are we looking at for the ES? Big time frame, clear breakaway. Next, we've got this 58. We had a 5800 and 5835 gamma line. And so I'm going to have to check on it and see how it's going. But just like every single day this week, we had a big run, a solid fade, and then buyers bought at 2 o'clock or sometime around that area. All right. They might have 2 buying times that they do it. But my thought is look out for price exhaustion here, because price exhaustion is going to matter in this particular environment because it has mattered in times past. Blew right through this line. Not important anymore. And so now the next level is heavy congestion above at 20,578 to potentially 20,684, right? But coming into the day, particularly because we've got so many Fed speakers, folks, it is going to be choppy. You need to manage the ranges very carefully. Very, very carefully. All right. Next one for the YM. This one, huge range expansion. Foreign divestment continues to pour in here, but doesn't look like anybody else. Savage fade yesterday, dip, but could not recover these higher zones, particularly 20,400, 20,340 was the place that we had a ton of problems yesterday. We did see a ton of liquidity sweeps. So the YM actually might move in a different direction than the other instruments today, right? Because it's got a wall of worry to climb up and then the fade. But this is a very different pattern. So my suspicion is it's still by the dip. The dip's been bought. When it gets up here and it cannot get up over this 42,500 zone, you got to cut and run, okay? Absolutely cut and run. Here is what the 1 hour charts look like. I'm going to go backwards. We've got this broad range, right? This is the 4 a.m. candlestick yesterday. This is the 4 a.m. candlestick today, right? We broke out of the 4 a.m., collapsed down into it, fell like a stone, broke through it again, fell again, all right? Lots of liquidity sweeps on both sides. Now, over here, here's our 4 hour formation. We moved up, could not get through it. Here we are at the bottom, so everyone is thinking, man, we better get through this, because if not, we are going to head down into the value area low, and then even lower into our levels of support near 42,340, which is where we spent a ton of time yesterday. Here's the NQ. I know you guys are probably going to hate that I did this in this way. I just want you to see broad behaviors and how they are looking at each other. 4 a.m. candlestick, super noisy. Midnight candlestick down here. Statistically speaking, we do test this area 68% of the time. So if there is a bounce action event, watch for price exhaustion, and then that is very likely a nice target that you can take. Maybe you trade the MNQ. But that is what we are looking at. Big breakout. I mean monster move over the last little bit. And this opening candle formation I don't have highlighted. Always important for me to look at. Look at how far away we are from value area high. That's insane, right? This is an exhaustion for sure. It's a blow off top into exhaustion. That is my thought. And there's nothing for sure. We know all that. All right, let's take a look at what's going on. Here, I drew the midnight candlestick just because it's sort of a little dimple in the thin volume nodes. What did this do? Came down to the base of the 4 hour, bouncing above it into the body. It is very likely to head to the top, right? It is by the dip. Up, up, pull back, you buy the dip. Okay? It goes into this area, you start taking some gains. That is as simple as it gets. If it loses the line or it cannot bounce to a new high, you know there is weakness and it's time to take some profit. All right? Let's go to the Qs. Whoopsie. Oh, big flush, and then now trying to get up over that 4 hour. Listen, that's a breakaway, but look, this big gap up, there are traders, all they do is fill the gap. That's the only trade they take. That's their sweet spot. And so they're going to be looking for this gap to fill, and as soon as it fills, they're going to shut down their machine and they're going to go to the beach or whatever it is that they do. All right? So gap fillers, going to be important for us to look at here. Heavy congestion sitting around, and remember, a ton of noise because the Fed speakers are going to be chatting and we are not going to have trend. I don't think we're going to have trend at all. All right, here it is for SPY. Same thing. 4 o'clock candlestick goes to the bottom, heads up at the top, going to the bottom, breaks the bottom, comes back to the top. So if you're saying to yourself, I wanted to buy the top of these, listen, the bottom of these, your stop needs to be tight. Don't leave it big and wide because it's going to fall off a cliff. Tight stop. When it recovers, you get to buy it again. Or you go, wait a second, I'm going to collapse down and I'm going to say, holy smokes, maybe I need to be short. This is just one flush, one individual, right? You can see it curving back into the range. Price action is very thin. Okay, that's it for me, folks. Please, if you have Serious Business Radio, I am on there at the Wharton School of Business with Janet Alvarez this morning, and then on Top Step TV from 9 to 12, and then later this afternoon at Metastock, showing off that product that I built that I'm so very proud of. All right, everyone, take care. I'll see you soon.